All right, welcome back to another one. Um, I'm gonna do a review of the trades that I've taken in September thus far. Okay, because this video might be long, so I'm gonna go straight into it. Now, with the context for the first trade, actually, if you remember, for us to go all the way down here, right, price actually took out a very long-term low, a significant liquidity level on the monthly time frame. And so, really, two things can happen, right? Every time price hits a key level, especially a liquidity key level, we can have a reversal or we can have a retracement, and then a continuation after that. Now, there are ways, really, just from really price action, you can tell what transpires of those two things. Has price reversed or has price just simply retraced? So basically, all I was doing was employ my experience really to really come to a conclusion of what I'm seeing is either a reversal or a continue or a reversal. Now, it had been quite a while actually before I could get a trade um, set up. Mostly because for me, I need the daily time frame to be crystal clear. I need the daily time frame to present an opportunity. Only then can I engage. And so, if there's nothing on the daily, it's in a key level on the daily that is being engaged. Um, Prices neither in premium or discounts, or in this case, we are really in deep discounts. So, really, even the buy setup, nothing was presenting there, right? You could buy the retracement if it's a retracement, but still nothing was presenting itself. That's fine. So, I think a week or two, something, there was no opportunity for me there ever since I took that sell away over there, that swing trade that I did. So, where price is, oh, right here, where price was at that time, I saw that, okay, really, price actually closed above this bearish fairly gap over here, but still, I was seeing a reaction, right? I even tried to look on the weekly, but nothing really was there, really. Okay, if you ask me what was price reacting to over here, I couldn't possibly tell you, but I knew at the moment in time that okay, something is presenting itself here, and we might see, uh, you know, bearish price from here. And actually, um, going back to what I said when I started, it was also because I employed my experience and I could tell that price had not reversed. Okay, you'll know why later on with the concept that I'm going to introduce later on. But I could tell with this movement over here that okay, this was not a reversal, especially if I combine it with the weekly time frame, and also just with, like I said, with experience, you if you see this a couple of times, you can anticipate what might happen based just on how the the movement is, the candlesticks and closes and all that. So if you pair this with the weekly time frame, you will tell okay, we are not yet bullish. Okay, I know at that point in time where price is, it was kind of attractive to try to look for buys, but the reversal had not really occurred. All right. So what am I seeing here on the daily? I'm seeing price trading up to consequent encroachment, which is no, actually this is the main threshold for the order block. Okay, and then I paired that with the H4. So you see around 50% level of that daily order block, there is a 4-hour order block as well. Now, if you clean that up, if you see here the zero key level there, right, refined to the H4 time frame, and we see already we get a rejection on that. Okay, that's actually where I freed my first sell from. Okay, over there, because then I would move. I saw a setup right there on the lower time frame. All right, fine. Now you see price did actually react on that main threshold, and then we had a sell off from there. Even on the H4 order block that I just showed you, we did have a sell off from there, and that at that point in time there, that was my first sell over there, and then a continuation sell right after that. Okay, this is the concept that I wanted to introduce to you, which is more rejection candles. But I'm not going to be able to talk about this in depth, although I feel if you go and do your research, kind of like a back testing, uh, you will come to the same conclusion that I have. So basically, every time price hits a key level on these intermediate time frames, okay. But let me be specific about the H4. I'm going to just particularly talk about the H4, and the key level doesn't matter uh, if it's an H4 or higher. It can be H4 daily or even weekly. Whatever key level it is, as long as it's significant. Usually, we can get a reaction on that, which is in this particular case the rejection candle, where price shows right that is indeed reacting to that key level by rejecting of that level. And so for a bearish rejection candlestick, you'd have um with that's that's candlestick that trades inside of that key level, rejecting of that and closing with the small body and a long wick to the um long wick up there, and then for a bullish one would be a long wick down there, right? So always a small body and then a long wick. This one also is a bearish reaction candlestick, a long wick, a small body, right? Um, go back in time and you know do your proper back testing actually, and you find that this is actually something that happens consistently, right? Now you might be wondering, why am I showing the days on this candlesticks right over here? Actually, it's something that I found out is that every time where there's that rejection candlestick, as also there's also the place where we get a swing forming, swing high or swing low forming actually. Um, Guess you can tell already here that this is price, moving from being bullish and then reversing here to being bearish. Here price being bearish, and then we have a reversal to being bullish, and here's price being bullish, and then we hit the key level, price reverses bearish, right? So that's on the 13th, 15th, and 23rd. If we look on the daily, 13th, that's where we have a swing high. The 15th, we got a swing low, and the 23rd, we got a swing high. All right. That's pretty much all I can tell you about it. This is something that with the rejection candlestick, it's something that I've actually this year I've just been using this year. I don't know. Uh, it started quite. Oh, it's something that I observed quite a bit. Um, in gold, I believe. Yes, it was spent quite some time trading gold this year, or trying to trade gold this year, and then this popped out to me, right? And I tried to look it up on the internet as well. There's just not enough information in there. That's fine, and I'm not gonna try and convince you of anything or teach on this one, because again, this is something that's fairly new to me, even though I've been using it, but not it's not really something that can use actively. Right now, it's something that's gonna pop up to you out on your chest, because most of the time, if you realize when you learn concepts, you find out that something has always been there in front of your eyes, but you've not been seeing it. So basically, this is what I'm trying to do right now. I'm just trying to bring this to light, and once you see it and you do your own back testing, you will know what to do with it. I trust that, that's what will happen. So enough about that. Okay. Um, go back to something that I shared on the Telegram channel, right? About this press hitting a key level and then we get a reversal, and then a continuation on the next day. So actually, I'm gonna show you a live example on with the most recent trade that I took this week. Yeah. Um, in it, you'll see how I took my a position during the reversal candlestick, if you will, and then continuation on the next day. Um, right. This is how I started. Right. Remember the discussions we have in the Telegram channel, and the discussion. Prices moving from a consolidation, and then we had a sort of like a displacement up higher. But again, if you use a hard time frame narrative, you understand that price is still bearish. So really, it is no need to look for bullish, um, or to be bullish. There's no need to buy. Just anytime we go higher, we just going up to premium, and that's where you find your most high quality sell trade to just continue with the order flow, right? So the key level that we had here, because I told you with what we just came from there, is that we hit a key level, and then we get a reversal, and then the next day we get a continuation, right? So the key level here is previous weekly high, and so I take my first trade on that reversal, and then yeah, that's to be the end of day close. So it's closed bearish. That's fine. And then the next day I'll take my continuation, right? Something probably on this H4 order block, but I remember correctly, price came up and we took I believe it was a session high, right? So I took my first sell trade, and then second time um, was a limit as well, something I activated deep in the night, I believe. And so yeah, got my first trade on the reversal, and the second trade on the continuation. And I believe this is how it looks like on the daily, right? The first one here on the first day on this candlestick right over here. Remember, this is the previous weekly high. That's the key level, right? And then the next day for continuation, right? Even just a little side note about that rejection candle, right? So it's not just on the H4, even on the daily, actually something that you can observe. Remember, we took our first sell here, right? So price rejected of that main threshold, and so you see, right, with the long wick, so that's a rejection from that key level. So we can have a continuation the next day, and so forth and so forth. That's when what was price trading into here, if I remember correctly. It was a previous weekly low, I think. Yeah, it was previous weekly low, because I also sent that in the Telegram channel as well. So you get a rejection, see, with that long wig and small body, and then the next day continuation to the upside. Even though that was the phase actually price started moving in consolidation. I remember I was looking for continuation sales on this family gap over here. All right. So, but if you're still bullish in that day, you were not necessarily wrong. It closed bullish nonetheless, but there was resistance there, so it wasn't gonna be an expansion to the upside or whatever. All right. And on this one here, price rejects on that key level, which is the previous weekly high. Although we do not have a small body, right? It's significant though to see that all that movement, right? Because at one point in time there was a massive green candlestick, but all that movement was offset after price hit that key level, the previous weekly high, right? We saw a deep retracement back inside. So then it would make sense for the next day for you to look for a continuation to the downside, especially to since we got sell-side liquidity of the consolidation low. In any case, that was successful trade. We also, not only did we take out the low of the consolidation, we went as far as external range low. Yeah, pretty much that's it. Actually, I hope this was insightful, and if you found this video helpful, share it with somebody. Cheers.